So that's how the markets are up to. Weakness in the benchmark indices, but let's shift focus to Vedanta then, and that's going to be a buy now, sell now lens topic today because Vedanta is rolling the charts with the gains of over 4.5%, and that's after the company announced the demerger of its diversified business, bifurcating its business into 6 new companies. With this demerger, it aims to cater to the growing demand of commodities, energy and technology across the world. But what does demerger mean for Vedanta and how are brokerages seeing this post this announcement? Let's get in more details from our colleague Soumeet Sarkar.
Well, Vedanta demerger is the biggest news that has come in post-market on Friday, and what the company is doing is they are demerging one of the entities into 6 different units. Now, the original listed Vedanta will continue to hold the stake in Hindustan Zinc. They will also hold the semiconductor business, the display business, and the Vedanta stainless business. Now, the other unit, the new unit that is Vedanta Aluminium, will hold the aluminium business, and it will also hold the 51% stake in Balco. Then there is Vedanta Oil and Gas, which will have the K in India business. Then there is Vedanta Base Metal, which will have the copper and the zinc international business. Then there is Vedanta Steel, which will hold the iron ore and the steel business, and lastly Vedanta Power will hold the power units of the company. Now, the company has kept the demerger ratio quite simple. For every 1 share that a shareholder owns in Vedanta, they'll get 1 new share of each of these new entities going forward. Now, the company will require approvals from SEBI, exchanges, that is BSE and NSE, from NCLT also, and they're expecting all this procedure to complete by the first half of financial year 2025. Now, the positive thing coming out of from this demerger is value unlocking, because if you see currently Vedanta's businesses are saddled with huge holding company discount and are sometimes significantly undervalued. For example, if you see currently Vedanta's market capitalization, that stands at close to 82,700 crore rupees, while its stake in Vedanta in Hindustan Zinc in itself valued at close to 84,400 crore rupees. And post demerger, individual businesses could see a better value proposition going forward. However, the grey area remains when it comes to the net debt of the company. Now, how the debt will be divided among these companies are still not known. The company's total net debt stood at close to 59,000 crore rupees, and seeking 75% approval from the secured creditors on this net debt net debt division could be one of the issues when it comes to this demerger. Now, earlier also we have seen Vedanta struggling getting approval from secured creditors when they were looking to transfer the reserves. So this is the grey area that continues to remain when it comes to Vedanta's demerger. How are the businesses valued? Now, the Vedanta entity, the standalone entity which will have the stake in Hindustan Zinc, is the most valued at close to 58,000 crore rupees. That is the enterprise value. The aluminium business is the second most valued at close to 44,000 crore rupees. Then comes the oil and gas business, which is valued at close to 22,000 crore. And the least valued business among the Vedanta group is the power business, which is valued at close to 4,600 crore rupees. Also, Hindustan Zinc came out with a similar announcement where they're looking to separate each of the entities into zinc and lead business. Then there's the silver business and the recycling business. Now, analysts have not given individual value to each of these businesses, but zinc and lead and silver are the most valued businesses in Hindustan Zinc currently.
All right, thank you so much for that, Soumeet, for actually outlining what exactly has Vedanta done with this particular move of demerger, and they're expecting that demerger by FY25. But let's ask our experts, based on this news flow, should you look to bet actually on Vedanta and the entire group? We have Rajesh Agarwal as well as Kunal Bothra joining us on the show. Very good morning to you, Rajesh, as well as Kunal. Thank you so much for joining us on ET Now and Buy Now, Sell Now. And Rajesh, coming first to you, no doubt that you have Vedanta that has taken this move of demerger into 6 businesses, splitting their verticals as well. But do you think with this move, the concerns around the debt actually goes away? Do you think that based on this particular news flow, you can relook at Vedanta as an investment opportunity?
Good morning, Cheryl. Good morning, Srishti. Good morning, Kunal. Vedanta, the big news after market hour that came on Friday was a real positive shocker, I would say, because definitely the stock was highly undervalued, despite the fact that it held so many verticals: oil and gas, metals, minerals, copper, everything under its belt, but still it was not getting the valuation. And that can be clearly seen by the fact that the market cap of Vedanta was almost equal to the holding it held in Hindustan Zinc, other businesses being of zero value if you take the market cap alone. But the problem is with the debt. the company has huge debt, almost 59,000 odd crore rupees, and uh, almost $2 billion of worth of debt is going to mature, come for a payment in 2024, and there is no clarity as such how that will be done, and no clarity that how the debt will be divided into different companies. Yes, there would be value unlocking. People looking at simply investing in oil and gas would go with Vedanta Oil or something like that. But still, it will take at least 12 to 15 months period time to the things to materialize, and that's a long way. I'm not in a hurry to buy at this point of time. Maybe we should wait for some clarity on debt before taking a bet. In the longer term horizon, yes, there would be value unlocking, but it's a very long call right now. Right now, if for some reason the stock touches around 248 to 50, I would suggest to book profit.
Okay, so that's the fundamental take coming in on Vedanta. Won't be a buyer at this point in time, and after the jump that we have seen today. As per Rajesh, the valuations look cheap, but the debt concern remains around 240. He's advising to book profits. But Kunal, coming to you, and what a volatile stock Vedanta has been, because just 2-3 days back the stock was very close to that 200, 205, 7 odd mark, and now all the way up above that 230 odd mark. So purely on the technicals, would you advise somebody to take positions in Vedanta, or would you also go with a stay away kind of a recommendation?
I think we've been advising to stay away from the stock over the last so many months. Even at the point when the stock was at 300, 330 mark, that was I think just about a few months back for Vedanta, because the stock has been extremely volatile, a big underperformer with respect to most of the other metal counters, and I would still believe that even in this last 2 days of bounce or a rally for the stock price, it doesn't change the chart patterns quite dramatically for the stock on the long term basis. So I would maintain that trajectory for and the view for Vedanta, that on bounce for traders who've been long on the stock, if in case they get the stock closer to their cost price, I think that would be a good time to try and exit the stock and come back into the traditional name. Even if you're looking at more focused approach towards the metal stocks, I would still believe that the likes of JSW Steel, Hindalco, Tata Steel, etc., these could be much better bets.
All right, so that's the call coming in from both of our experts when it comes to Vedanta. Definitely not too excited about that particular counter, at least in the near term.